What's going on, guys? Welcome back to another video. In this video, I've got another extremely important AMC update to bring all of you this afternoon. So what we're going to be covering in this video is a continuation of the fake squeeze that is being perpetuated by the hedge funds and the next steps that they are taking to try and get you to sell their position. Now, if you guys remember my beware of the fake short squeeze video from a couple of days ago, we made that video right around here. And basically what I was saying is be careful for the hedge funds running up the share price and then crashing it back down in order to make the average everyday retail investor think this is all over and I will now sell my position. Now, all of us who are privy to more information and have done all of the research necessary to know what is really going on with this situation knows exactly what the hedge funds are trying to do, and that is not going to phase us. Now, in this video, what we're going to be covering is how the hedge funds are actually trying to manipulate the data that we are always looking at in order to try and make us sell. Now, the data that we're going to be looking at today really does not make a lot of sense, and we're going to go over exactly why they're manipulating this data at the current time and when I think we could see this short squeeze situation really kick off and get extremely interesting. So before we get into all of that information, if you guys would like to earn 2 free stocks with Webull, valued up to $1,850, make sure you check out that link down below in my description. And if you guys don't mind, make sure you guys leave a like on this video. It costs you nothing to do it, but it really helps me get this information out to as many people as possible. Now, when we're looking at the actual share price of AMC today, we can see that it's trading pretty flat. We are having a somewhat of a volatile day as of the time that I'm recording this video. We opened up pretty far in the red, had some pretty significant buying pressure, which sent us pretty solidly into the green. I think the highest that I saw we were up today was about 2%, and now we are trading pretty flat. Now, let's get into some of this extremely important data, but a key thing that I want you guys to keep in mind through the remainder of this video is going to be this June 2nd share recount date. That is going to be extremely important towards the end of this video when we go over exactly why the hedge funds are so focused on this date and why they are trying to manipulate all of the retail investors into selling their shares before this date actually comes around. So when we come over to this Twitter post right here from Ortex, this is going to be an AMC short interest update. So AMC shares continue to be volatile, with yesterday being the first down day after an almost 2-week long rally. When we see such a significant rally such as we've seen over the last couple of weeks, a pullback like we saw yesterday is only healthy. Even when we see the massive short squeeze that we know is going to happen coming up in the near future, we're not always just going to see a massive green candle come out, and we're never going to see any red days. If you guys remember with the GameStop rally, we saw some massive run-ups, a significant pullback, and then an even bigger run-up. So you guys need to be prepared if you are planning on holding through this entire squeeze for all of those dips. So AMC is up over 26% since the beginning of May, and here are the important numbers. Estimated short interest as a percentage of the free float, 15.25%, and the utilization is sitting at 97.24%. So the key thing about utilization that we've gone over in a lot of my videos is that the utilization is the amount of shares that institutions are willing to lend out versus the amount of shares that have already been lent out in the market. So 100% means that all of the shares possible to lend out have already been lent out already. Now, when we see this utilization number stay relatively high and around this 100% mark over the past couple of weeks, now we did have that one day where the actual utilization fell into the 20% range, but we have already covered that. That was a glitch in Ortex's system. So we know that the amount of shares that are actually being loaned out are staying relatively same. There has not been a lot of returning of the shares in the overall market. We've seen a couple of fluctuations when the shares that have been returned spike up, but then they get loaned back outright again. Now, we can prove that statement by looking at these iBorrowDesk numbers. So when we come over to iBorrowDesk, this is going to be the AMC data. We can see that the short borrow fee rate has fallen significantly from last week when we saw this number at about 90%. Now, this makes sense because there are a lot more shares available to be lent out, and the actual short borrow fee rate is a reflection of the supply and demand in this short market. So we can see that the numbers massively spike up all the way to 4.5 million shares being available to be lent out. out, and these numbers massively fluctuate. They go down, they go up, and they come right back down again. We are now sitting at 1.9 million shares being available to be lent out, but we are still seeing the utilization at 97.24%. Now, what this is telling me is when you think about it, when a stock rockets up, similar to what we saw for AMC, you would expect to see more shorts come in at the top if they really believe that this is such a great short position for the near future. I would not expect to see a lot of these institutions covering at all of these levels. We've seen these short interests go from about 24% down to about 15% over the last couple of days. But we have seen AMC spike up to massively high levels, going above 14 and even above 15 in the after hours trading periods. Now, this is going to bring us back to something that I have been talking about in almost every single one of my older AMC videos when we were talking about how the hedge funds try to manipulate the actual short interest in order to try to make retail investors think that there's not a short squeeze going to happen. So let's see exactly how they do this. So when we come over here, the short interest reporting instructions from FINRA, pursuant to FINRA Rule 4560, this is going to be very important. Member firms are required to report total short positions in all customer and proprietary firm accounts in all equity securities to FINRA on a bi-monthly basis. These filings are made online using the short interest reporting system accessible via Firm Gateway at firms.finra.org. When we look at this, the actual short interest data is self-reported by all of these institutions and hedge funds. So let's think about this very logically. It is in the institution's best interest to come out and misrepresent the amount of shares that they actually have sold short. When you think about this, if they can artificially push down the actual short interest as a percentage of the free float, you're gonna see retail, especially in this situation, kind of freak out and not really understand what is going on because the data does not make sense at the current time. Why is the short interest going down when the utilization is still so high? So if you were thinking, well, Rule 4560 seems to be a very important rule, and if you violate this rule, it kind of proves that you are manipulating the market or trying to be deceitful in your positions, and that if FINRA or the SEC can prove that you are engaging in these type of tactics, they would really want to come after you and issue these different institutions some pretty significant fines. Now, that would be the logical step to go, but sadly, that would be incorrect. When we take a look at a couple of examples, we can see a firm settled FINRA charges back in December of 2019 for failure to comply with short interest reporting requirements, related supervisory failures concerning certain foreign listed securities, violating FINRA Rule 4560, short interest reporting, and Rule 3110, supervision respectively. So we can see here that according to the FINRA letter of acceptance, waiver, and consent, the firm failed to report 3,129 short positions due to a system-related coding issue that excluded certain foreign-listed securities from the firm's short interest submissions and incorrectly reported 6 short interest positions as totaling 6,790 shares when the short positions were actually 68,724 shares. To settle the charges, the firm agreed to a 1 censure and a fine of $300,000, $200,000 for the short interest reporting violations, and $100,000 for the supervision violations. $300,000 is a drop in the bucket for these institutions that are committing these violations. They honestly are probably actually accounting for any violations that they are going to commit throughout the year in their annual budget because they know, because of the fact that they are able to manipulate the markets and move the price of certain equities in their favor by engaging in these manipulative tactics, that they're going to make a lot more money than this $300,000 fine. Now, the largest fine that I have ever seen from a violation similar to FINRA Rule 4560 is a $1 million fine given to Credit Suisse due to their involvement in a naked short selling situation in Turkey. Now, I want you guys to think of these institutions like a very massive sandy beach. When the SEC and FINRA actually come out and issue these fines, essentially what they're doing is they're walking onto the beach, picking up a grain of sand, and going home. These fines mean absolutely nothing to these institutions as long as they are able to keep making more money than they would have been able to do if they have not committed these violations. Now, why are they actually trying to do this? So, what they're essentially doing is they're trying to artificially push down the actual short interest to make it seem like there's not actually that many shares sold short on the market at the current time. What is the purpose of this? When we come over to this Reddit post right here, to clear up confusion on share counts and voting, I received this email from Jay Merriweather of the VP of Investor Relations at AMC as a response. So the shareholder count will be on June 2nd to determine who can vote by the July 29th meeting. The shareholder count date has not been delayed. So when we blow up this email right here, we can see, as you know, the previously scheduled AMC shareholder meeting, the previously scheduled AMC shareholder meeting for May 4th, 2021 has been postponed until July 29th, 2021 with a new record date of June 2nd of 2021. A count will be conducted on June 2nd, 2021 to determine who is eligible to vote at the July 29th shareholder meeting. Voting will begin sometime after June 2nd when AMC has issued final updated proxy information. The number of shares issued and outstanding as of the June 2nd date will be included in the updated final proxy material. So right around or on June 2nd, we are going to get a new updated number on how many shares are out in the market for AMC and how many shares that retail investors actually own. This is extremely important. Last time that we received this information, we saw that retail investors owned 80% of all of the outstanding shares for AMC. If this number goes up or even over 100%, this is very bad news for the hedge funds because it exposes all of the manipulative tactics that they have been engaging in over the past couple of months. So how does this play into the short situation that we are talking about in this video? So their goal, the hedge fund's goal right now, is to get you to sell. If you now, as a group of retail investors, own less shares than you previously owned by this June 2nd date, then it's going to look like there isn't that many manipulative tactics going on the market, and it actually could signify, it could artificially signify that retail investors now have less confidence in AMC than they previously did. This is why they are trying to do all of these different price spikes, sell off, artificially push down the short interest in order to entice you to sell your AMC shares. So nothing I say in these videos is financial advice. These are for educational and entertainment purposes only. You guys can do whatever you like with your money, but if you are selling shares of AMC now, you are doing exactly what the hedge funds want you to do. They want you to sell your shares in order to make this voting number lower. Now, in my personal opinion, I do not think that we are going to see the squeeze before June 2nd, and here is why. Right now, the hedge funds are in a very interesting position. They know how to manipulate this stock in a very substantial way. They can let it run up. They can short it right back down. They do a lot of their manipulative tactics in the pre-market and aftermarket because there's less volume, and they can pretty much do what they want with this stock. But AMC apes are still holding strong. Now, if these numbers come out and it's really a big bombshell that retail investors own over 100% of the amount of shares that are actually supposed to be out there, that is when I think we could start to see the squeeze happen. At the current time, the hedge funds don't really have a reason to cover, and I think that we are going to be waiting around until a little bit after June 2nd until we see some more significant volatility. Now, that is my own personal opinion and speculation. It could happen a lot sooner. It could happen a lot later. We're just going to have to wait and see. So that is going to conclude this update for AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. And if you want to see more videos like this, make sure you hit that subscribe button and make sure you turn on that notification bell. That's very important so you're notified every time I post a new video so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.